Hi, Richard here on Thursday the 19th of October. Well, resistance is still in place. Many days later, we're testing resistance, and as yet it hasn't come down. This is a chart of the Dow on a daily basis, and we're really looking at an oversold market, and we're expectant of a retracement. If we were looking for where that is going to target, we'd say that usually that the Dow retraces to the 50% mark, which is 10,500, but we'd start looking for resistance about the 6,050 mark. On the chart of the Aussie dollar, that's the big one. Given that we've had parity reached last Friday night, we're looking for a test of this rising trend line, and in the event that it actually blasts through it, then we're looking at a retracement down to about 9,600. We can measure that again, similar to what we did on the last chart, and the targets, 96 are the round numbers, 95.28, 95.30, 95 cents 30 is the secondary target for a 38.2% pullback, as opposed to a deeper retracement, which would take us down to this 93.84 mark. Looking at a chart on the Aussie market, in fact that's a chart of the Euro, but if we look for the Aussie to follow up on the Dow, we can see that this trend line, which is really only a cursory trend line, is being tested. Certainly this massive ranging sideways activity, it's not pushing through the overhead resistance. Wave 2 is still very much in place at this point. What we don't know is how severe the pullback's going to be, but any close below this level would give us a target of 45.45. So the Aussie market certainly drifting sideways and now starting to point towards the downside, and we can see the MACD is starting to fold over. Given the importance of the US dollar at the moment, having a look at this reversal signal is pretty important, because it gives us a very strong guide as to what's going to happen next. In the event that this line was blasted through, then that would certainly give us a downside target of 72 or down to even 70. But at the moment we've got a weekly doji reversal, and that is at this point still a few days to go before the close of the week, but in the event that that remained green, it would be a bullish engulfing, which would suggest after this A, B, C retracement, and each leg here is equilateral, so meaning that it's the same measurement and same measurement as each other, and we'd be looking for a target to the upside, which we can set once we've had confirmation that in fact this support line is holding up. But of course that dip down there was parity on the Aussie dollar as well. Just before I move on to some other charts, I wanted to show you a chart of gold, which of course is still in its uptrend, and this long-legged doji here was off support, getting close to the 8 moving average. Certainly there's no point in which we could say that this trend is reversed. It's found a bit of resistance at 1380, which was a target. I would say the next round number, in the event that we do get support, would take us up to 1400. I haven't done this for a while, but I'm going to show you some charts now, where we're going to work through both the materials and financial sector. This is a chart in alphabetical order of alumina on a weekly basis, and you can see the size of the move through the GFC and the subsequent sideways or trending activity that's occurred since then. The target on this stock, alumina, is $2.30. We can stretch it out. Of course, it looks a lot different on the daily chart if we do that, and then I'll have to shrink it up, but nevertheless you can see that support down here at $1.50, aiming for $2.30. That would be the height of it, no doubt, and it's coming up in this sort of 5-wave action. So whether or not it gets there is another thing, but nevertheless it's worth having a look at it from that perspective. And here is a chart of Amcor, which has been in this uptrend. The channel is very well defined. It's riding along the 200 moving average, and you can see that even here, even though it pressured that channel to the downside at $6.30, we're getting support looking to go to the upside, relative strength is still falling, and volume is slightly on the increase on the way down. So I just wouldn't be jumping in at the moment, but let's have a look at all of these stocks. And I left the Elliott count on this, and we can see that this is BHP. The big round number is $50, which is its previous high. That was back in May 2008, and certainly at the moment, whilst this is overlapping and generally spells a correction, and equal to that is volume is falling, the chart looks like there's some more upside to go, so perhaps 45 is the next target. In the event that we watch carefully this correction that's unfolding at the moment on the world indices. So just at the moment I wouldn't be taking any long positions on stocks until we get a retracement, and then that will allow a position of entry. This is Boral. You can see that it worked up around $6 for some times, went sideways. It's a weekly chart as well, then fell through sharply, retraced to test the $5 mark. It's a Fibonacci round number, and now is looking for further direction, but certainly that is moving to the downside more so than it is looking long. Here's a stock that's made some people a lot of money, which is Fortescue, and that's really pumped up just in the last couple of weeks. The target at the upper trend line has been hit. You can see 1, 2, 3 times. I doubt whether there's much, if any, upside in that. Be looking actually to the short side to take it back down to about $5. There would be $1.65 odd in that, in the event that we do get weakness. Certainly chasing this stock over and above this trend line, unless there's a convincing break on a volume increase, then it would be worthwhile. But in the meantime, we're going to have to sit, be patient, and watch that stock. Incitec Pivot has been a tremendous stock over the years, had a 20-for-1 split way back up here, and subsequent to the GFC just absolutely caved in. But it was really a darling right throughout 2006 and 2007 before collapsing through the GFC. Currently pushing up towards its channel line. The target there is $4.10, tracking slightly below on the weekly, but at this point it's sort of in no man's land and not a lot to the upside, so would be one to stay out of. James Hardie, this is again a weekly chart. There's a lot more range in this, as you can see, and compare that to the previous charts, but it has been in a very ferocious downtrend for some time, and as far as the stock goes, we'd be looking almost for the retracement on this channel to be able to look for a short position up around the $5.95 mark, to be able to then trade it down towards the $4.30 or even $4, or possibly lower. $2.90 is the March low target. It's certainly not doing anything but going down at the moment. And the next stock was Cargora. It's not a stock that we trade. Certainly it has been a beautiful stock back in 2006, but these wild swings lower, I guess, savaged a lot of people's accounts. But at the moment it's just been trading between about 50 cents and $1.25 or $1.50, one to leave alone. Here is Mincor. Usually a pretty nice stock to trade, certainly gives us really nice moves when it gets going, but came off support, falling volume, one to leave alone at the moment. Be careful that it doesn't break through the trend line, and then we'd be looking for quite a nice short actually in the event that did occur, possibly down to $1.30. The next support is $1.30, and then of course 47 or 50 cents way down there. Orica has been holding up successfully above $25 for some time now. Magic run up from the February or March low after the GFC, but at the moment volume is pretty much flat, not much support, perhaps off the $25 medium Fibonacci line, but if it was to move higher, then $30 would certainly be that short-term target. Rio Tinto, very similar to BHP if you remember, upper trend line here. It's certainly tracking that way at the moment. $82, target would be sort of around that $95 mark, which is still quite a lot in it, particularly if we're trading it on a daily chart. And let's have a look at that. You can see that this is reasonably straightforward in terms of being able to trade it. We've had support off the bottom trend line, which goes way back, and then we've come up in these pretty wild swings. That's a sort of $8 swing there, and making a new high, fall back in an ABC, and then here's what looks like a wave 3, an impulsive movement. We expect some correction before getting support perhaps around the 200 moving average there before it heads higher towards that 95 mark in the event that the broader indices continue to go. So that's it. I think from the materials perspective, I'll do the financials next. Certainly they're not looking anywhere near as healthy as the materials, and in line with the difficulties coming out of North America. We'd expect some weakness continue in the financials as credit continues to contract. For more information, please go to themarketforecaster.com.au, and you can see the detailed industry sectors and gold stocks there, along with the other indices.